Let's get into it, and if you're holding BINI stock, buckle up. Monday marked the first day of trading for Bollinger Innovations under its newly reverse split structure. After enacting a 1-4-2-50 reverse stock split, the company saw its share price open with an implied boost, but any optimism didn't last. By the closing bell, BINI had cratered more than 30%, ending the session at just $5.95 per share. That's after starting the day near $8.75, the expected price based on Friday's pre-split close of 3.5 cents. In one session, the market wiped away nearly a third of the value that was manufactured by the split. That collapse isn't just brutal. It's damning. It tells you investors don't buy the story. They see through it. Another reverse split, another ticker change, more dilution in disguise. There's no confidence left. And honestly, there's little reason to have any. Now, let's talk about the context, because this isn't the first reverse split this year. It's the second major one in just a few months. The first was 1-4-100 back in early June. This time, the company turned it up to 250. And what did it do? Just kick the can further down the road, trying to stay listed on the Nasdaq. This isn't restructuring, it's stalling. But here's where things get even murkier. Despite the massive change in capital structure, there's still no 8K filed confirming the reverse split under the BINI ticker. Nothing. No official update filed with the SEC about Monday's action. How is this even allowed? It's bizarre. Reverse splits are material events, they're meant to be disclosed. But Bollinger Innovations, or whatever it wants to call itself, continues to operate in a near-total blackout when it comes to transparency. There's been no new filings under BINI, and the last Form 14A filed under MULN was way back in early July. Since then, silence. That Form 14A did give them shareholder approval to execute a reverse split, up to 1-4-2-50, and eliminate existing warrants. But how those warrants were actually removed, who bought what, and whether preference shares were issued in return, we don't know. They claim to have cleaned the books of $25 million in convertible debt, but there's no formal disclosure outlining how. Just vague press releases and a website overhaul. And speaking of that website, it was stripped down before the rebrand, removing most of the financial history tied to Mullen. That's not a reset, that's revisionist corporate history. The SEC should be asking questions. Instead, we're watching from the sidelines as another EV penny stock skirts the rules and tries to outlast the clock. Now, why are they doing all of this? To remain Nasdaq compliant. After all the dilution and damage, the company still trades with a market cap of about $15 million, nowhere near the $35 million Nasdaq requirement. And the deadline? August 26th. That gives them just a few weeks to maintain that market cap above the threshold for 10 consecutive trading days, or they get delisted. It's no wonder the company rushed this split. It's likely their final play. But Monday's trading shows investors aren't buying it. You can slap a new ticker and a new name on a company, but you can't hide the fundamentals. And BNI's fundamentals are crumbling. Let's not forget, just 3 sessions ago, this was a 3-cent stock that had already bled over 99% from its highs. The reverse split didn't create value. It just reshuffled the deck chairs. And yet, despite all this chaos, there's still no updated float data. No filings. No clarity. It's like watching a magic trick without the prestige. Just the disappearing act. So what happens if BINI gets delisted? It moves to the OTC markets, where liquidity dries up, institutional investors disappear, and most retail brokerages severely limit or halt trading altogether. Shareholder protections are minimal. Prices become volatile and wide. It becomes a place where stocks go to die slowly. If you're still holding this stock, ask yourself, is management behaving like they care about you? Are they transparent? Do they communicate clearly? Do they disclose material events the way any responsible public company should? Or are they running a pattern, the kind where reverse splits follow dilution, followed by more dilution, followed by another split? At this point, it almost feels like a game, a slow-motion liquidation where shareholders are always last to know. The only way anyone's making money here? Probably shorting the stock. And I say that half joking, half seriously. Because for anyone still long this thing, you've been through the ringer. And every time the stock tries to bounce, it gets hammered back down by another announcement, or worse, a lack of one. So here we are, Monday's collapse is now in the books. BINI opened the week with a 30% loss. No new filings. No updated investor info. And no evidence of the SEC taking a closer look. This is not how a Nasdaq-listed company should behave. And if it continues this way, it won't be one for long. We'll be watching closely as the August 26th deadline nears. Will they dump more shares to push the market cap higher? Will they miraculously file something? Or will it quietly vanish to the pink sheets? Time will tell. But the signs are all there. And they're flashing red.